Good morning, everybody. It's Chris here from Serene Education with the 4 Majors Notice Update for the 5th of August 2011. Hi guys. If you're woken up to a very bleak situation on most currency pairs globally. The US dollar got a hiding, the euro and sterling got a hiding. And the yen intervention has taken a bit of a slight knock. We've seen pullbacks across the board on any cross pairs with the yen intervention or quantitative easing. We also saw on Chief yesterday. So if you look at the daily candle here on euro, yesterday very bearish engulfing, failing to raise higher than the prior bullish candle, and we saw a huge move to the downside, cancelling all those that bullish up move, that consolidation up move, and breaking a prior support area in doing so, and trading well to the downside. Slight hesitation now at another previous area of support and resistance, coming into the 1405 or 1450 mark. But as you can see, the CTC is looking rather good. We don't have our correlation at the bottom yet. That will come, I can assure you. We've had slight hesitation this morning. Be aware, today is the first Friday of August, which means non-farm payroll. We know that the situations in the US are dire at the moment. We saw yesterday the Dow Industrial, the 30 top companies in the US lose a total of 500 pips yesterday. That's literally 5%. We saw Asian market shares last night fall, get hammered. The Japanese main index fell 3.7%. We saw South Korea also lose 3.7% on their share markets. Australia dipped 4% last night, and Hong Kong shed 4.6%. I think it's realism. The terms are coming together that things in Europe aren't really stacking up, and things in the States aren't going any better. And there's a realization that there's a definite slowdown in the economy globally. We've seen oil prices drop $20 in the last 10 days alone. We were trading at $100 not more than a week ago, and we're now around at the $84 mark as of this morning. And the longer the slowdown continues in the market, obviously oil prices will drop because there won't be a need to produce that much oil, and we're going to see a slowdown occurring. That's going to take effect on everything else, obviously. So more investments have come. We've seen the price of gold rally yet again and post a new high. As of yesterday, we saw gold even touch highs of around the 1680 an ounce mark. We've seen a slight pullback this morning, a slight consolidation, but as long as we don't see the price dipping below around the 1650 mark, we might see another attempt higher. We are seeing more highs on precious metals. Silver, silver is exactly the same. We've seen a slight pullback. Yesterday's daily was quite a significant down candle, but we have seen silver trying to make steady gains over the past couple of weeks. We are trading at 39 this morning, 39, just above the 3900 mark. So slight consolidation. We were trading 2 days ago at 42. It's down now to 39. So it's been a very bearish day yesterday in particular. That I'm hoping will kind of stem out. We're trading at a price support as we speak. We're going to see possibly a nice bounce to the upside on that. But you can see overall that things are looking very, 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 very negative. A lot of market makers out there just don't know where we're going to see any positive at the moment. Now, before I continue, let's have a look at the news. The news up for today. There's a hell of a lot happening today. We have Halifax HPI month-to-month figures this morning at 8 a.m. GMT. which is just at about 30 minutes from now. Following that with CPI and month-on-month figures with Chief. We have the Sterling PPI input month-on-month figures. We have industrial, here we got the German industrial production month-on-month figures. They're expecting, the previous figure was 1.2%. They're forecasting 0.1. Talk about a slowdown in production figures, especially coming from the main boys in Eurozone, Germany, the industrial. Everybody, Eurozone doesn't function without great industrial production figures from Germany. And they're expecting a 0.1. I wouldn't be surprised if it came out even less than that. If we do see a figure higher than 0.1%, I'll eat my hat. But then we go into CAD this afternoon, 12 noon, we have unemployment change. We'll also have the unemployment rate. They expect no change from the previous figure at 7.4%. There again, I'd be very, very interested to see that outcome. Building permits. This is the strange thing about it. You look at CAD building permits month on month. The previous figure was 20.9%. They're forecasting a negative 4.8. I mean, talk about a drop in building permits. If that comes less than that, then wow. It just gives you an indication of how things have literally hit a wall in the past month or so. Non-farm payroll, big one, at 1:30 p.m. GMT this afternoon for the US. We go to the US figures this afternoon, 1:30 p.m. GMT. The previous figure was 18,000. They're forecasting 89,000. The unemployment change. A huge, huge change there. If that actual figure comes out any bigger than that, well, sheesh. The unemployment rate, they don't see a change in that. The previous figure was 9.2%. They expect it to remain the same. So globally, everything going down. We've seen really shitty production figures that came out end of last Friday for the US dollar, which really didn't bode well, especially with all this the actual easing, well, the raising of the debt ceiling and the actual plan put in place to try and scale back at least that amount over the next 10 years in cuts. Just didn't help, because a lot of people just looking, okay, great, we take all this, we were raising something, the debt ceiling, and we're going to be making these cuts. But how are we going to make them back? Our economy is slowing down. Our production is taking a hammering. How are they going to do it? Unemployment is at an all-time high. Where's it going to come from? And the market just doesn't see any creditable reason for them to actually be buying. So we're still seeing the US dollar losing ground, and it's the same with the euro at the moment. Huge, and this I think is going to show us seeing 1400 tested very, very soon. We hear that Italy and Spain and a number of financial ministers across the eurozone actually starting to question all this bailout funding and mention that it just has not done any world of good. And I mentioned it a number of times. Keep throwing money at a problem, you ain't going to get rid of it. You're just building a deeper hole. That money's got to be recouped somewhere. And if it's not in our generation, it's going to be in our kids' generation or their kids' generation that's going to have to deal with it, unfortunately. And that it's just looking really good. No, not good at the moment. So, look, euro at the moment, huge down candle. I expect to see further moving to the downside. If I look at a weekly chart, you can see that we are definitely in a consolidation zone. You can see these highs are getting lower and lower. We're being squeezed now between 2 points. You can see where we've come from. Look, we on a bigger time frame, we've had a bounce noticeably here and there. So if you look at where it is now, then we're looking roughly around the 1400 for the next week or so. Further than that, we see a bearish, and we see over the next week closing lower than 1400 and going through this 13900 mark, which I can see happening, to be honest with you. Then we could definitely be seeing a new turn in the bearish market if you look at the overall scheme of things. 2008, when we had that top and we saw the market fall out from under it, you can see that high and the previous one here in 2009, late 2009 going to 2010, and the one now at the mid 2011, a lot of consolidation. Is this another low high from that one? If that's the case, you can see that we are seeing a different trend of downside movement in this, and we could see further progression to the downside in the next couple of months, even years, I suppose. It's looking that bleak. So yeah, let's go back to where we are now, consolidating around this area here as we head towards the 1400 mark. Ideally 1400 is going to be our next target. We're seeing a slight pause now at the lower end of the wick. Yesterday's bearish candle, yeah, you can see that, a slight hesitation around that area, failure to break higher than that. Intraday we're seeing a failure at the 23.6 fib retracement area. See from the high yesterday's bearish candle to the bounce we're seeing now, you can see the price is failing to rally above 23.6 fib area, and if it fails to break above that, then obviously then it's just a failed consolidation. And all we're seeing is a consolidation after all this selling we saw yesterday, a slight consolidation over the Asian market session before we see another attempt lower. You can either wait for the break here at 1405 for you to gain entry into this trend again to the downside, because CTC is in our favor. We have a red candle at the moment now as it stands. If that hourly candle closes lower than 1405, then we should be looking for nothing more than shorting opportunities lower. Next up is sterling. Sterling against the US dollar, and you can see the same hesitation that we've seen, a lot of indecisiveness over the past couple of weeks. Price has been whipping around this area here, a prior resistance level in the past. Notice that we're starting to see this confluence where we've seen price failing to trade higher, and you can see where price has been, where we've come from in the past and where we are now trading. You can see price has failed to materialize and break higher than the major trend. We've broken through that major trend, We've broken through that major trend. Price has reverted to the upside, testing the underside of that major uptrend and failing to trade higher, which happens to coincide with the 16,4500 mark. And we've seen some very bearish candles indeed. And at the moment, we're trading at the low end of that, which happens to be around about price support and resistance as we speak, around the 16,2500 mark. Price has found a support in this area, but I can assure you, I don't see it stacking up for too long. CTC is, yes, giving us a long-term bullish setup at the moment, but in order for that to be productive and for us to be looking for long-term, we need to be trading above a prior resistance level. So even though it's giving us a heads up, let's go long, we need to be breaking, we need to be trading above a prior resistance level in this case, and it's pointless to get into a trade if you're trading against the overall up market here, or the resistance level. Rather wait for a break of the resistance before we look at potential upside movement. A break above that for the 16,4500 and above the major trend, yes, then we can start looking at 16,700 as a possible target. Until it's not doing that, such time as it's not doing that, then we're looking for shorting opportunities. And you can see the bearish consolidation on this range here, and price actions happening at the low end of the candle. So we should be looking for possible breaks lower, and we should be looking for obvious areas of first target, second target, third target. In particular, roughly 1500 is potentially one, but overall I think 1600 is still going to be on everybody's lips, because ideally that has been a very strong support and resistance level long term. So psychologically I think 1600, if we break below 1625, we're going to see a slight pause at roughly the 1500 mark before we see 1600 reattempted soon. So intraday we should be possibly looking for consolidations before we see further extensions lower. Notice how price is hugging an area of price support and resistance. It is trading on the underside of that. We're starting to see a break higher, but that could be just a consolidation of the breakout, initial breakout we've seen just recently. Notice on an hourly chart we're having lower swings, which dictates, and you can see price is trading at that area. So the next couple of hours could be very, very detrimental to this. If we see a break and close higher than that, then we obviously could see a slight pullback of some sort. Bearish engulfing candle here would just confirm a breakout, pullback, continuation, and then we should be looking for further downside movement. So as I mentioned, then we're looking at roughly the 1600 mark as our overall target to start with. Psychologically, that has been a very strong support and resistance level in the past, but along the way you can see we have noticeable consolidation. Roughly around the 16,1200, 16,1500 we start seeing it. So any between these 2 points here we're going to start seeing a slight consolidation. Only really bearish news is going to break straight through that zone, but ideally our first target on an hourly chart would be the 1500 mark from where we are trading now at 16,2700. So there's a nice major drop there for anybody. Just wait for that hourly candle to remain bearish. Engulfing all of this consolidation here would definitely give us further indication of downside movement. US dollar Swiss franc, we have seen a slowdown on this pair. Why? After all this, because there was quantitative easing measures put in place, as one would put it, to try and stem this. The Swiss franc does not want a very negative US dollar. It doesn't mean good for the economy, the GDP, import-export figures, etc. Because a very strong Swiss franc surrounded by a very weak Eurozone currency does not bode well for the Swiss franc setup. Apologies, running out of words. So yes, we saw quantitative easing. You can see it's not really stacking up at the moment. Now we have found a support at roughly the 7600 mark. Got to see a break lower than that to see further continuation to the downside. We've seen we've seen 3 days now of support at this level. Notice, however, we have seen slight consolidation. These are daily candles. You can see we've had trading to the higher end of the spectrum on these 2 prior days. However, you can see prices close to the lower end of the wick, with lots of wicks, a lot of space between the wicks, like a shooting star type formation where you're seeing more price action in the bottom end, depicting that overall the sentiment at the end of the day is still looking bearish. Okay, we might have seen a lot of buying into the US dollar against these pairs the last 2 days, but it hasn't stacked up at the end of the day. That feeling, that gut feeling, that's the out there, the market is still looking bearish, and that's the out there. If you look at candlesticks, if you can read candlesticks, you can tell the actual sentiment of the market just by looking at candles, and the candlesticks are telling us that there isn't really any they just don't see any really value in this easing process from Swiss franc. The US dollar is hemorrhaging. There's nothing you can do about it. And that's just, you can see that on the figures on the past, on the Dow, the FTSE, the S&P, the Nikkei, blah blah. They don't see anything happening. They don't see anything bullish at the moment to trade. And why would you want to be trading against a trend? That's exactly it. You'd be stupid to do that. It'd be really, really nice to be putting your money and trading against the yen. One of our students this morning mentioned that he has got a close friend of his who actually has gone long for in the S&P here in the UK. Well, I don't know. I don't see it. I hope for his good he's got a stop loss in place, because I don't see it stacking up. So yes, sterling negative trend long term. That's a daily outlook. You can see where we've come from and where we're still heading. We have found support here at this level, and we are seeing a consolidation squeeze. That squeeze is in that area there. So if we still see consolidation around here, then obviously, yeah, we're going to see it just going sideways, not making any headway. Ideally, we want to see a break of this this consolidation range around about the 76.20 mark or somewhere around there. Let's have a look at intraday and see. Yep, you can see the consolidation on an hourly chart. There we go. Definite support in this area here around the 76.50 mark. Got to see a break lower than that to confirm further downside movement. You can see the movement that we saw yesterday just didn't stack up, and we've seen price revert to the downside again. It's a classic case where we haven't seen price failing to break above a previous support and resistance level. Here again, we had a bit of slight support chart previously. Price yet again yesterday rallied to that area and failed to break higher because there's no conviction People don't see any conviction from this upside movement, and sure enough, it just lay over, and we're seeing price reverting to the downside. So as it stands now, we can see price consolidating at the low end of the scale here at 76.50. Not really going any higher. You can see yesterday's there's a slight band along here. It's consolidating this slight band here, the lower end of this is the wick span I mentioned. So you take these hourly candles, put them all together, you can see price action. There's a lot more happening at the bottom end of the scale, hence the long wicks, the top, and more action at the bottom of the candle. That's how you put them together on a daily. So failure to break higher than that, we're definitely going to see consolidation, a possible break lower. CTC's in our favor. All we need now is a bearish engulfing to actually give us indication of further downside movement. All the moving averages are trading above it. Also another bearish signal. So look, heads up. Rather wait for a break, a genuine break to the downside before we look for entry levels. Ideally, we need to be trading well above the 0.780 in my eyes to even contemplate going long. Until someone's not doing that, then I'm looking for further shorting opportunities. Last but not least is the yen. Look at the daily. Very, very interesting chart. We know that 80 has been, for the best part of this year, a very strong support area, but you can see that price action has been consolidating in a range to the downside. The institution moving average is still above us. I think it's a definite ceiling level, but you can see the highs are being lower, lower, and lower. Intervention happened just around about the time the Japanese market had that unfortunate earthquake and the following tsunami that devastated the economy. And look what happened yesterday. Quantitative easing, monetary, if rules came into effect yesterday, applied by the Japanese bank or Japanese government, and we saw price rally. I mean, talk about a rally. It's crazy. We've had two indecisive candles before that, and then bang, the Japanese government got involved, really shook things up. We saw price shoot higher. I mean, it's literally gone from 77 right up to 80 in one fell swoop. But you can see that price action failed to close higher. Ideally, we wanted a full bullish engulfing pattern to confirm that the sentiment out there was all in favor. They could see a genuine reason for this actual move by the Japanese or banking sector to actually try and get the US. They started getting the US dollar to almost like a defib type thing, a bit of a shock to try and get it to bounce, trying to get people to buy into it. But you can see the long wick here confirming that sentiment-wise, a lot of people were still thinking very negative. And sure enough, this morning we saw the Asian market take it slightly higher because that's what they want. They wanted to go higher. But overall, the market is not looking like it wants to do exactly that. We're seeing price trading at the lower end now. We can see another long wick, not as long as one previously, but it's just not stacking up. It's got to be trading above 80. And if it's got to be trading above 80, then you're back into a consolidation range, which you know for a long time has just been going sideways, and we're going to be going sideways. We need to be trading above the institution moving average because that long term just dictates that we're looking for further bullish upside movement, because overall over the last 200 periods of time frame for that particular time frame, they see bullishness. And at the moment now on a daily we are trading negative. We have been trading negative since May of last year, and we've broken through a very strong support level, and we've tested a very strong a prior all-time low at 77, and it's failing at 80. So what we have is a breakout, very strong breakout, consolidation with the continuation to the downside. It looks like it's going to occur. That's what it looks like. If you look at the intraday pictures, you look at the 4-hour candle, see that it's tested that 80 mark, tested the institution, traded above the institution moving average for 4 hours, and then said no, don't see anything happening in it, and lost ground. Notice the wicks, very long wicks dictating price action at the bottom end, depicting negativity. The sentiment is not there, and you see price trading lower. But we could still look at that as on a fib projection. It's now testing the 50% fib retracement of the initial move. Got to see a bounce. if anywhere at 50, 60, if it closes below 61.8, then we're just going to see price continue to the downside. That's the last part of call for any price retracement, 61.8%. We don't see a bounce at this area here, then we're just going to see continuing lower. It doesn't look all that great at the moment now. If you look at the lower end of the candles, the 5 minutes, the 50 minutes, and 30, it just doesn't look rosy at the moment. Now you can see price action a lot. This Asian again, another a bullish candle, long wick, but you can see price is trading at the low end of it, dictating that price action is still looking very negative at the moment now. And you can see support was trying to find something around the 78.7 mark, but failed to, and then we're seeing price trading lower as we speak. So as it stands now, the US dollar just doesn't seem to be helping the situation, because overall the market sentiment just doesn't see anything to be bullish about. Whether you're throwing money in it or you're trying to ease things, etc., like that, you can't, because overall the market makers out there just it doesn't see anything that's going to help with the easing effect, and so you're still seeing price drop to the downside. That's it, guys. Please be aware that there's non-farm payroll today. Nikki and I don't trade non-farm payroll. We do have trades open. We'll just make sure that we have tight stops, etc., like, and just manage our positions. But overall, we won't be trading today. If you are, please be very, very aware that there's going to be a lot of volatility. You can just look at these candles, these wicks, and some of these charts. They are enormous. Canadian dollar, Australian dollar, New Zealand dollar. We saw some massive moves yesterday, and if you aren't trading in the correct direction, and you aren't putting your stops in, you're going to see accounts being wiped out in no time. You're going to see it happens. I've seen it, and it's not fun, I can assure you. So please be very, very aware that there's going to be a lot of volatility. With all the news out in the States at the moment now, it'll be interesting what the news comes out today. Even in Europe, we've got some news announcements at 8 following. Please make sure that you are aware of those news announcements and you're not trading, or try and stand aside while those news announcements are made, and then we just trade what the outcome is. That's about it, guys. I hope you have a fantastic weekend with family and friends. Take time just to recoup. Come Sunday, I do suggest spending a couple of hours on Sunday evening just to have a look and see exactly what the market did on Friday over the last week. Look at weekly time frames to depict where we are. It's always good to look at a weekly time frame to give us an idea what's likely to occur for the following week, and then we start looking at our smaller time frames. But otherwise, enough for me. Have a fantastic weekend, family, friends, and most importantly, trade serenely.